Have you ever driven past a massive new skyscraper and just wondered, how in the world did that get there? It's like one day it's an old parking lot, and the next, there's a crane in the sky. Well, today we're going to pull back that curtain. We're going to break down how a huge real estate deal actually works, from a simple idea all the way to a towering reality. Let's get into it. So every big story has to start somewhere, and this one, it starts with a number, $15.5 million. That was a price for 5 pretty normal-looking retail properties in Orlando, Florida. But what they planned to do with them was anything but normal. And that really brings us to the million-dollar question, or in this case, the multi-million-dollar question. How do you take a handful of ordinary shops and turn them into a gleaming 10-story luxury apartment tower? Well, it's a fascinating journey of vision, a ton of money, and some seriously detailed planning. To get our heads around the how, we've got to first understand the what and the why. This wasn't just some random shopping spree. This was a really calculated bet on a very specific vision for where Orlando is headed. Okay, so here's the big idea. Transform those parcels into the Apollo Tower. But here's the really clever part. They're not actually tearing the shops down. Nope. They're building the tower right on top of them. Now, why is that so smart? Because it means the project has money coming in from the existing retail tenants from day one. That is a brilliant move to lower the risk. Now, you can't pull off something this big by yourself. It takes a whole crew, kind of like a dream team of real estate experts, where everybody has a critical job to do. So let's meet the main players. First up, every single deal needs a visionary. For this project, that's Jason Jones. He's the guy with the eye, the one who saw these properties and didn't just see 5 shops. He saw what they could be. He found the deal and got it under contract. He really got the ball rolling. Okay, next, you need the people who make it rain. That's Clearview Eastern Fund. Their job is to figure out the entire financial puzzle. They're the ones who structure the investment, bring in private investors, and get the big loans. Let's be real, no money, no tower. It's that simple. And finally, you absolutely need someone who knows how to actually build the thing. That's where Tony Benj comes in. This guy is a 30-year veteran of big-time development in Florida. He's the seasoned pro who will make sure everything gets built right, on time, and on budget. So, you've got a great idea. You've got a killer team. But in real estate, that's only half the battle. We've all heard it a million times, right? Location, location, location. So, what was it about this spot that made it worth the multi-million-dollar gamble? See, this tower isn't just popping up in some random neighborhood. It's right in the heart of Health Village, which is this huge 172-acre community built around a major hospital campus. You gotta picture it like a city within a city. It's designed to be walkable, it's connected, and it's already buzzing with professionals. And a place like that is a magnet for a very specific type of resident. They're targeting healthcare workers who love to just walk to their jobs, young professionals who crave that convenient urban lifestyle, and even empty nesters who are ready to downsize and live somewhere with tons of amenities. And check this out, the data totally backs this up. The median household income right there in that little bubble is over $113,000. That's a lot higher than the average for the rest of the area. This isn't just a guess. The numbers show there's already a market of high earners who can afford to live in a luxury building. And it's not just about the money either. This is a highly educated area. More than half the people living there have a bachelor's degree or even higher. So the big takeaway is pretty obvious. The perfect tenants for this new luxury tower, well, they're already there. Okay, so vision, check. Team, check. Location, double check. But how do you actually execute this thing? You need a roadmap, a step-by-step plan. So here it is, the 5-phase master plan that takes this project from a piece of paper all the way to a profitable building. Yeah, this is not a quick flip. We're talking about a 46-month marathon. It starts with phase 1, acquisition, just buying the property. Then phase 2 is all the pre-development work. This is the really critical paperwork phase, getting all the permits and approvals from the city. Phase 3 is about refinancing to get that huge construction loan. Then comes the longest part, phase 4, actually building the thing and leasing up the apartments. And finally, phase 5 is the finish line, either selling the whole building for a big profit or refinancing it to hold on to as a long-term investment. All right, now for the part everybody wants to know about, the money. Where do the millions and millions of dollars to fund something like this actually come from? So just to get off the ground, the total capital needed is $17.5 million. That's $15 million to buy the properties, plus another $2.5 million for all the planning, the lawyers, and just to have cash in reserve for unexpected stuff. So where does that 17.5 mil come from? Well, it's a mix. About 75% of it is debt. That's a short-term loan from a bank. The other 25% is equity, and that's cash coming from private investors who want a piece of the pie. This is a super common way to structure these deals because you're using the bank's money to do most of the heavy lifting. So why would private investors line up to put their own money into this? They're chasing the return. And the key metric, the number they care about more than anything, is called the IRR, or internal rate of return. To put it simply, it's the fancy term for the annual profit they expect to make. And here it is, the number that gets investors to open up their checkbooks. The target IRR for the Apollo Tower is between 18 and 22%. In the investment world, that is a very juicy return. And it's what makes a long, complicated project like this worth all the risk and headache. So let's just tie this all together. From an investor's perspective, why does this particular deal work so well? What are the highlights that give them the confidence to go all in? You know, when you lay it all out, it really just checks all the boxes. First, the basics are rock solid, an amazing location with a wealthy customer base already there. Second, it's a smart plan that makes money from day one and is being run by a team that's done this a million times before. And finally, you've got the payoff, that incredibly attractive 18 to 22% target return. It's a formula that's just built to succeed. And that's pretty much it. That's how you go from 5 little shops to a 10-story tower. Every huge building you see started out just like this, as an idea, a team, and a bunch of numbers in a presentation. It kind of makes you look around your own city differently, doesn't it? Makes you wonder, what overlooked corner is going to be the next big thing?